and welcome. You're watching Ideas for Profit on Moneycontrol. I'm Neha Bothra. Today I will talk about ITC. The FMCG company saw an all-around improvement in the third quarter across different segments. Remember, the first and second quarter of this fiscal year proved to be difficult for ITC following the pandemic-induced slowdown. Overall, the management also indicated it will give out an interim dividend of 5 rupees per share to investors. Analysts highlight that volumes for the company will be on the higher side. They say that this will largely be due to the supply side advantages ITC enjoys, along with the dominant position in the rural market. As far as domestic retail investors are concerned, ITC stands out on two parameters essentially. One, of course, is the valuation, and second is the healthy payouts to investors. Let me also take you through the highlights for the third quarter. As far as overall revenue is concerned, we saw a jump of 6% on a year-on-year basis, largely driven by the double-digit growth in the FMCG segment and the agriculture business. Overall, EBITDA margins were under pressure, coming down by nearly 4% on a year-on-year basis. Tax outgo was also on the higher side at 27% versus 19.3% on a year-on-year basis. As far as recovery is concerned, the cigarette business clearly stood out. The company's strategy to introduce new variants helped the company garner more as far as improvement on the demand side is concerned. Although it went up just 2% on a year-on-year basis, the improved mobility in metros and large towns also helped the cigarette business see a remarkable improvement on a sequential basis. Overall, also the FMCG segment was one segment that stood out, coming in with the double-digit growth of 13% on a year-on-year basis. This was largely driven by the health and hygiene category and also the foods category like spices, noodles, etc. That helped the FMCG major clock in a major improvement for this segment. The e-commerce channel has been very important for ITC. It doubled its revenue contribution to this segment to about 5%, and this is noteworthy. As far as the overall modern trade is concerned, we saw some weakness in the first half of the financial year, but this has improved. Analysts say this is largely because there has been significant improvement in urban areas following easing of restrictions of the lockdown, and also the fact that the rural area has seen strong growth over the same period. Market and outlet coverage also saw a significant revamp, and it improved for customers in terms of better availability and freshness of produce. The agriculture business was also strong. It went up nearly 19% on a year-on-year basis. But what really stood out was the handsome sequential growth of 184% for the hotel business. Remember, there was a lot of pent-up demand coming in as well. But the paperboard business was still under pressure, seeing just about a 1% improvement. Analysts point out that overall for financial year FY22, the company will see a decline of as much as 8% on the revenue front, largely driven by the slowdown in the cigarette business, the hotel business, and the paperboard business. The next big question, what is the outlook for ITC? According to analysts, based on the performance in the December quarter, they have upgraded their estimates for financial year 22 and financial year 21. In fact, as far as fiscal year 22 is concerned, they point out that there could be an improvement of as much as 10% in revenues following normalization on the earnings front. Apart from this, remember, there will also be an improvement in the hotel business. Looking at the pent-up demand, we do expect this to perform better. The cigarette business is also likely to go up once mobility is enhanced further. So overall, as far as estimates for fiscal year 22 is concerned, on that basis, analysts point out that the stock is trading at a current PE multiple of 18x. That's all we have time for on this edition of Ideas for Profit. Stay tuned for more ideas. Thanks for watching and goodbye.